Welcome to Crescat's Market Call, featuring our macro and activist mining research. I'm Kevin Smith, Crescat's founder and chief investment officer. Before we get started, please read through our important disclosures being shown now. These and additional disclosures regarding the risks involved in the type of investments we will be discussing, as well as the fund's performance, can be found on Crescat's YouTube channel or on our website using the QR codes on the slides. The type of investments discussed on these videos can carry significant risks, including risk of loss. The videos are intended to be general discussions of macro investment themes, the mining industry, and news with respect to the companies in our activist metals portfolio, and are not intended to be investment advice or an offer of investment advice or services. Crescat's managed funds only accept accredited investors, and the discussion in these videos has been prepared with that level of audience sophistication in mind. Any forward-looking statements may or may not come to fruition. If you enjoy our videos, please click on the like button and make sure you are subscribed to our YouTube channel to get notified of upcoming episodes. You can also follow Crescat Capital on X for ongoing macro research and important news updates on our activist metals positions. If you want to learn more about Crescat's investment strategies, we encourage you to reach out to our head of investor relations, Merrick Iwahashi. His contact information is on the screen now and can also be found on our website at crescat.net. All right, everybody. We're going to get started here. Thanks for watching. We've got Tavi and myself live today. We'll both be doing a little macro presentation, and then we're going to have Quinton, who was pre-recorded yesterday, giving an update on a number of our stories, almost all of which are going into the field this season or very soon to be drilling. So stay tuned for that. So let's get started. One of the biggest concerns that we've had for a long time is the concentration of risk in U.S. equities and the valuations. And there's a couple of charts that came out recently. This one's from B of A with the Fed's Fed's Wealth Series information that came out not too long ago, but it was as of the end of the first quarter, and really showing the concentration of household wealth that's in U.S. equities, and it's a historic high. It's one of the risks in the marketplace right now, especially at these high valuations that we've been talking about for a while. It's something important to be aware of, because there's a lot of risk of overcrowding in U.S. equities at this time. But let's look at the next one, because Ned Davis Research put together this chart that kind of strips out the pension component of that. If you adjust the wealth series for pension assets, which are individual U.S. household equity assets, it gives an even better picture of the more discretionary money that U.S. investors have in the stock market. And it's truly an even higher high concentration of U.S. household wealth in equity assets. Just an important risk to point out here. Let's keep going. Now, it's not just U.S. households that are concentrated in U.S. financial assets, equities in particular, but the allocation of foreign holdings to U.S. financial assets at large. This was from top-down charts, and recently published, showing also record high foreign holdings of U.S. financial assets. Now, we've been talking about the risk of the dollar, and I realize there are a number that the the dollar short trade has become somewhat of a popular and perhaps crowded trade. But when you look at foreigners that are allocated to U.S. assets, it doesn't look like we've seen much rotation at all out of U.S. assets, even though the dollar has started to weaken in a significant way. Let's keep going here. And the real crux of this, and we've shown this probably 100 different ways, and I know Tavi's had a chart in the past that looks at this composite of different valuation measures, and it was just another way of looking at it. Chart that was going around Bloomberg from Macro Bond just a few days ago, showing when you look at the combination of trailing PE, forward PE, Shiller CAPE ratios, price to book, price to sales, EV to EBITDA, et cetera, et cetera. The combination of valuation metrics is on par or higher than 1929 and the tech bubble in 1999. And yes, valuations have been stretched for a long time. But what's the risk when you have high valuations? It's not really a timing indicator, right? Because okay, things are high, but what's the catalyst? What's the timing? Well, it's a measure of the risk. The catalyst can come from any different direction to burst these bubbles or to cause a change in the macro trend. We had Trump tariffs back in April, and that was one catalyst for a significant correction. And there's a number of other potential catalysts out there. Now we have Iran, and we have the Israeli-Iran war heating up to a major degree. Is the U.S. going to get involved or not? I mean, these are additional risks in the marketplace. We have stagflationary risk. We have U.S. debt risks. We have this concentration risk that I just pointed out, both U.S. and foreigners concentrated into U.S. equities. What's going to burst these bubbles? We don't know, but exactly. But we need to be ready for these things. Let's keep going here. Cash on the sidelines. Now, Tavi has pointed out this chart before. I thought this guy at i3 Invest did a really good chart on this. The cash on the sidelines, just because we have record amount of cash in money markets does not mean we have record cash on the sidelines. You need to compare the money market cash to the valuation of the equity markets. And this is comparing the money market valuation relative to the NASDAQ 100. And you can see, we're at similar levels to the peak in 2021, to the dot-com bubble in terms of cash available. The secular buying opportunities when there's real cash on the sideline, happens at after significant market corrections, like in 2008, like in the tech bust in 2001, et cetera. So be careful when you hear people talking about record cash on the sidelines. Let's go on to the next. Another risk out there, perhaps a catalyst, insiders, corporate. This is the ratio of sellers to buyers in the S&P 500 stocks. The Financial Times put this chart out recently, at a record high. And this, since this data was collected at least, and insiders can be early sometimes, like they were coming into that peak in late 2021. But this is a new record high level of ratio of sellers to buyers that we have, and just another potential signal. Yeah, could be early, but we don't necessarily know. Just something to be aware of. Insiders have more information than you do. Let's go on to the next. Another potential catalyst. We talk about stagflation. We've seen a lot of evidence. We have stagflationary forces. Here's just one on the economic growth side of things. The Bloomberg Economic Surprise Index is what we're looking at here year to date. You can see how it's a composite of different economic indicators versus forecast And you can see it's been weakening consistently all year. At the same time, we have these persistent, more stagflationary pressures. Not just from tariffs, from a variety of structural reasons. The record debt to GDP, the record deficits. Yes, tariffs are inflationary, and that's another potential force. But here's another catalyst potentially for the markets and another risk. Let's keep going. One thing that we've pointed out in different ways in the past is the counter cyclicality of commodity and industrial stocks relative to a lot of to the market at large. And in this case, we're looking at it compared to the tech industry. And how the capex cycles are key indicators and drivers of these rotations from one sector to another. We've been in a capex boom in the tech sector. We've highlighted before how that's a huge risk, and this chart is just showing that these are counter-cyclical forces, and you're starting to see a new wave of capex coming into the commodity sector. This is bullish early in the cycle, and look how it compares to the tech bubble in 2000. We made a lot of comparisons to the tech bubble in 2000 with the bubble in Magnificent Seven and AI related companies today. What I think is the bubble, it's just my opinion, but these are indicators that help you to understand why these things are potentially bubbles. We've had this record capex boom, record amount of money going into the tech sector, and a record at the same time, this record underinvestment in capex in the commodity sector now for over a decade. And these are long-term cyclical forces where money tends to go from one extreme to the other, and the opportunity for counter-cyclical growth on the long side in commodity and industrial related stocks today, we think is very high. The valuations are low. The bubble in the stock market at large, which again I think it's the bubble, is more related to the tech sector, the Mag 7 stocks, these mega cap stocks that have extraordinarily high valuation and have been in a boom. But to get that return on the investment and the growth going forward from this record capex investment is going to be a struggle. Anyway, let's go on to the next. So I want to highlight that Crescat Global Macro Fund, which has been around since 2006, has what is referred to as a negative downside capture ratio. What the heck is that? What that means is that on average, our hedge fund, the Crescat Global Macro Hedge Fund, since its inception in 2006, on average in down markets, in months where the market has gone down, and that would be referring to the S&P 500 on the right-hand bar, our fund has actually gone up. So downside capture, normally when you look at it, you'll say, oh, okay, we're hedge funds will look at this, and consultants who analyze hedge funds will look at this and they'll say, well, are you really doing any hedging? When the markets go down, do you go down less than the market? And if you have a downside capture of 80% or 70% or something like that, well, that means the market went down, but you only went down 70% or 80% of that. But if you have a negative downside capture ratio, that means your funds actually went up when the market went down. And on average, since 2006, when we launched this fund, this is what our funds have been able to do. Now, when you compare it to the Global Hedge Fund Index at large, the HFRX Global Hedge Fund Index, when global hedge funds on average have gone down, our fund has also gone up. And that's the bar on the left. So a lot of hedge funds, don't even hedge these days. They're long only funds in disguise. It's important for us to to maintain a low correlation to the S&P 500 at large, and to have short positions, to have counter-cyclical long positions like our activist metals portfolio, so that we're not just an index fund in disguise. We're trying to deliver alpha. We're trying to deliver long-term returns that beat the S&P 500 over long time frames. That's our goal, and we want to do it in a way that, when people really need the ability of a hedge fund to protect in these risky markets like we have today, we want to show the world that we have the macro themes and the positioning to actually be able to deliver and capture upside returns, through our ability to short securities, which we do in our global macro and our long short funds, or our ability to make money on the long side, even in a down market, due to our counter-cyclical long positions like our activist metals portfolio. We think that the negative downside capture ratio since inception in our global macro fund is evidence that we have a hedge fund that's a true hedge fund that is really designed to protect investors on the downside when we get into market, troubled market conditions, highly risky market conditions. We are not an index fund in disguise. Let's go on to the next. So gold is leading all major asset classes year to date in performance in 25. And it's ahead of Bitcoin. It's ahead of emerging markets, the Swiss franc, the yen up, the energy sector, U.S. stocks at large, treasury bonds, short-term treasury securities, oil, the U.S. dollar. So they're not including silver as a major asset class. Let's go on to the next. Look at silver. It's starting to outperform even gold now in the past month or so, and we've talked about that gold to silver ratio being at historic highs and really being set up for that gold to silver ratio to come down, meaning silver to start outperforming gold. And we've started to see that, finally in the last month, but maybe it's only the beginning. Yeah, silver's pulling back today. I think it's just an opportunity. But let's keep going here. Silver miners to silver ratio. So this is looking at the global X silver miners ETF relative to silver, and you can see that back in 2016 when that was that first impulsive move up in junior mining stocks and exploration focused stocks. Silver stocks went crazy at that time, and silver had just started to make a move at that time too. But the silver miners to silver ratio, if you think silver to gold is depressed, look at the silver miners to silver ratio. It's even more depressed. But we think this is something that's also on the verge of a breakout. And across all of our funds, we have significant exposure to silver mining stocks, both big silver producers in the case of San Cristobal, which is for our existing investors who are in our side pocket. They own San Cristobal, which is like the fourth largest producing silver mine in the world. Also has an exciting new discovery associated with it, big high-grade silver discovery. Our fund investors are invested in who are invested with us are invested in the side pocket. If you've been with us since prior to June of last year, when Deloitte, our auditor, forced us to move this asset into the side pocket, we've been reporting on the X side pocket performance of the funds, and new investors coming into our funds, do not get San Cristobal, although there is an opportunity to potentially pick up some if you are interested. Please talk to us. But we have a number of silver positions in our portfolio, not just San Cristobal, and it's a substantial exposure across all of our funds. Let's go on to the next. This was going around from In Gold We Trust, and it shows that most of these companies on here are public mining companies, but they include San Cristobal, a private mining company, which we were just talking about. Thought it was pretty interesting because it's as a company, as a mining company, it's the number 10 largest silver producer in the world. And that's ahead of BHP, ahead of Core Mining, ahead of First Majestic, ahead of Buenaventura. And when you look at the Silver Institute data as a single mine, the Minera San Cristobal mine is the 4th largest producing silver mine in the world. This is what we own at Crescat. And I just thought that was pretty interesting. Let's go on to the next. When we look at our precious metals fund, this is the performance through May. We launched this fund in August of 2020. And this is the X side pocket performance since June when we spun out the San Cristobal asset into the side pocket. But the fund's up 25.3% net since inception. We're almost approaching our 5-year mark here. At the end of July will be 5 years. So this is 4+ years where gold has now been in a bull market. Gold's up 10.7% annualized since we launched the fund based on that Spider GLD that you can see there. Our fund has been substantially outperforming not only gold, but the XAU, which is the Philadelphia Gold and Silver large cap mining index. It's been outperforming the SLV, which is just spot silver basically. It's been outperforming the VanEck Junior Gold Mining Fund, GDXJ. It's been outperforming the large cap VanEck Gold Miners, GDX, as well. So do I think we can continue this alpha, this excess performance above the benchmarks? I mean, absolutely, I do. I think we have an incredible portfolio. It's still early in the cycle for our heavy concentration on more of the exploration side of things. That's where the big upside is. We're creating value through discovery, and that's what our activist metals portfolio is all about. So I encourage you to go to our website, look at our presentations up there. We have both the Global Macro Fund, the Long Short Fund, funds that go long and short and invest in a variety of different themes. And we also have the Precious Metals Fund, which is an activist metals fund. It's involved in gold, silver, and other base metals too. We're invested across a number of different companies, over 75 different mining companies. We believe the portfolio is deeply undervalued with an extraordinary appreciation potential and catch-up potential here to gold itself and to gold and silver. And I encourage you to go to our website and check it out. I'm going to turn it over now to Tavi to continue the macro side of the presentation.
All right. Thanks, Kevin. Well, let's get started with my presentation, of which I'm going to focus on a few different things, but really oil and then currencies and some other assets that tend to be very related, have a very strong connection to energy markets as well. To begin, there has been a lot of issues with Iran and Israel that have been all over the news. This table that I'm showing on the screen is perhaps what everybody is paying attention to in regards to impact in oil prices. When you think about what goes through the Strait of Hormuz, is about 20% of global oil supply that goes through that strait. And so that's certainly of a lot of relevance when it comes to the potential impact in oil supply globally. Now, this is a new chart that I'm going to show now that I think it's even more relevant that I think people are not really paying attention to. If we go to the next chart, it's not that complicated. If you look at the red line in the first panel of the chart, you're looking at Iran's oil production. If you look at the white line, you're looking at OPEC's oil production, of which Iran is part of OPEC. as you can see here, there has been times where and they're in different axes for a reason, because OPEC's production is larger than Iran's production. So I just wanted to see the movement rather than in the same scale. You can see clearly that Iran's production has been steadily rising recently. OPEC's production, on the other hand, has been basically the same level as it used to be decades and decades ago. We have not seen much of a growth in OPEC's production of oil. Iran has been becoming a more and more a bigger part of the share of OPEC's total production. When you go to the second panel here, you can see that Iran's share of OPEC production is now about 15.5%. It's the largest in history of the data. And so what is so important about this is that oil production from Iran has arguably has never been so important. And so certainly what's been happening there, while everybody else is focused on the Strait of Hormuz, which is correct. I mean, I don't not saying that you shouldn't be concerned about that, but you should also be thinking about Iran's own production of oil are more relevant than they have ever been, are arguably in history. And so certainly what's been happening there to me requires more attention from a market standpoint, because I think the geopolitical premium in oil prices is perhaps mispriced. Let's go to next chart. Next chart, we're looking at a Bank of America chart in regards to the overweight and underweight of managers, fund managers, in regards to different sectors, and they're looking at the global energy sector in this case, and you can see that the bars, not the although the blue line, the dark blue line takes most of the attention when you look at this chart. It's really the light blue bars that look really interesting, if anything, in which shows that investors are really underweight on a relative basis the global energy sector. And so this is the stuff you tend to see before an explosive move, historically speaking. And so I think there we could be setting the stage here for those types of repositioning where investors go from not owning a sector to perhaps owning a significant portion of those companies, and potentially changing the relative performance, which is in the dark blue line, in a significant way, and potentially also reversing that downward trend that we've been seeing all the way back from 2008. I think even for mining folks that invest in the mining industry, when a lot of also focus has been on recession, which rightly so. You get a recession. Although we've pointed out in multiple ways how there's a counter cyclical factor to owning mining stocks during recession that people forget, in regards to how mining companies can actually perform very well during recessions. It did that in 1929, in the 70s, and even in the tech bust. But again, investors have a short memory, only look at the 2008 period. What I think it's also important is that from a mining standpoint, what is your risk? Is usually either on the price of gold or metals, falling, which I really don't have a view that we're going to see that in the future, but certainly could happen. But the biggest risk is a squeeze of your margin, in regards to particularly oil prices, energy prices in general. And so when I think about this, I like to own energy equities, because I think that they're not just been off the radar clearly, as pointed out in this chart. They're cheap, fundamentally speaking. But I also think that oil is incredibly undervalued relative to what's been happening in the world. So those are some thoughts about energy. But when you think about energy, immediately brings back another thesis that I'm going to talk in a few minutes here. Let's go to the next chart. You can also look at the overall energy sector relative to the S&P 500. which used to be close to over, steadily above the 15-20% mark, or close to the 20% mark, 18, 17, 18, 19, when it got up to 30% back in the 70s. And then we've been seeing a steady decline as well in that number. And now we're about 3%, of which, markets are taking the other side of it to a certain, a real extreme, in my view. If you think about how much energy the energy sector, represents for the overall economy from a profit standpoint, but also from how much we need of oil to function the global economy. It certainly should not be 3%, in my view. And so I think that's screams asymmetry. And this is why I wanted to show this. And a lot of times, you have oil prices moving up, and you start saying, well, that's the reason why you should own energy stocks. And what bothers me about those sentences is that the foundation of the thesis is right there. It has nothing to do with trying to predict what if Iran is going to bomb Israel or Israel is going to bomb. I have no idea about that. I just know the foundation of the thesis is there. The equity prices for energy relative to how much money they make is extremely cheap. It's an under-owned sector of the economy, and for all those reasons alone, it should justify at least a look over this sector. Therefore, why I'm showing in this presentation. All right, let's go to the next chart. Equal weighted commodities have been moving in a big way recently. I find it interesting that a Fed member, Chris Waller, has been very outspoken. Perhaps he wants the next chairman position when the time it comes for Jay Powell here soon, and has been very vocal speaking about potential for cuts in interest rates as soon as July. Was his in one of the interviews this morning, and I thought that was interesting because inflation is far from contained at this point. If you look at the equal weighted commodities index, it's now close to 17% appreciation year to date across all commodities. You can blame energy, but it's really not energy. It's metals, it's agricultural, and it's energy. And so across all these things, I'm starting to think inflation could start moving to the other way that the Fed wants. But also unemployment rates is starting to rise. If you look at permanent job losses, for instance, relative to unemployment rates, boy, we're seeing a major divergence there. Permanent job losses is starting to pick up in a very significant way. That to me is one of the most important indicators that tend to predict where unemployment rates could be, in the next few months, and that could be a huge way for the Fed to justify cutting interest rates. I've been of the view that short-term rates are extremely high relative to where the economy is, and for those that think the Fed can fight inflation, just take a look at how much money we're paying for interest payments to GDP. It gets to a point where there's so much leverage in the system that you almost force at any cost to lower rates to reduce your burden on the debt. Forget about inflation, and that's when hard assets begin to outperform. Therefore, why you're seeing on the screen hard assets, commodities, doing so well year to date, but not just year to date. They've been doing well for a while, and especially when you look at independent commodities, because when you're watching markets or investing in markets, what I find fascinating about a big macro thesis unfolding is that it doesn't unfold all at once. It does sort of like a domino effect. First is gold, and then you start seeing the miners, and then you start seeing silver, and then you start seeing the currencies, and it's sort of everything has its own order, and you never know when those orders are going to take place either. You can use technical indicators for that, but it's really difficult to time those things. But one thing that we have high conviction on is betting on history and looking at those imbalances and forcing central bankers and policymakers overall to not be able to fight inflation. And to me, that's really the center of our macro thesis here. Let's go to the next chart. Now, this is what caught my attention this week. in particular. I've been looking at this chart for some time now. In the prior presentation, I showed this chart and I said, I think the Canadian dollar is getting ready to break out. And why did I have that view? I had that view because if you look at the British pound, broke out of a similar trend back in 2024. That was the first currency that I saw that caught my attention, and I was really surprised by it. And as I was developing a view about looking at interest payments to GDP of the U.S. versus other places in the world, I remember telling Kevin, I was like, well, there's something happening here in the currencies markets that are, a bit giving me perhaps more conviction that the dollar might be turning. Then the euro broke out. The euro took off and broke out a few months later. Again, a domino effect in markets. These things don't happen all at once. Then the yen did the same thing. Boy, the yen, nobody likes the yen. Everybody hates the Japanese markets, not the equity markets, the Japanese currency. And then the yen broke out. Is there anything more hated than Canadian dollar? And I can even feel the tension of the audience. In terms of there's so many Canadians that watch these shows that we put out, and I find it fascinating how many of them completely ignore the fact that you're seeing these trends breaking out. And remember, these trends of the dollar tend to be linked to the gold trends as well. So was gold enters a secular bull market, it usually is aligned with a downward trend on the dollar. So you got to be paying attention to all these things. Now, let me show you a few charts that are all sort of interconnected. I respect that interconnectivity of markets a lot. Let's go to the next chart. Well, before that, positioning, because I saw a chart from Bank of America going around that, even probably my grandmother tweeted this as well regarding how the dollar is now a narrative that is crowded, that everyone is short the dollar. Look, maybe that is the case in some individual pairs in some cases, but I'm not a big fan of some of these Bank of America. Even I just shared a Bank of America chart at the very beginning. To be quite honest, it's their data. Who knows how they're calculating those things? I'm showing you a chart that is from the CFTC non-commercial positioning, and that this is real. And what I find interesting is that the Canadian dollar today is at its one of its most shorted levels in history. And so that I can tell you that positioning is really off in this currency alone. This is not a currency that is overly owned by investors. It's actually the other way around. Speculators are, historically one of its most extreme levels in terms of shorting the Canadian dollar. Now, you can say there's merits to that. Some people like to say that Canada has lost its way and probably will never go back to a place where it's going to attract capital again. I happen to think that when things get this extreme, and you have a view on oil, and you have a view on energy, and you have a view on commodities, and you know that there is a link usually to Canadian dollar performing very well versus the dollar, U.S. dollar, in times when gold is doing really well. Well, I like to take the contrarian opinion on this one. So I think the Canadian dollar looks very attractive as an investment as well. Let's go to the next chart. Now, look at this interconnectivity of markets. Canadian dollar versus Brazilian equities. It's the same chart, right? The Canadian dollar has been sort of, again, just broke out, hopefully here in this chart that I showed not too long ago. But the Brazilian market has been, doing a very similar trend. Now, let me show you another chart that sort of perhaps is leading this market in a big way. If the Canadian dollar is breaking out, I suspect that would be very positive for Canadian assets as well, the denominated assets, like mining companies that for regulatory reasons as well tend to raise capital in Canadian markets. And so as we see those things unfolding, I suspect that capital would also flow into Canadian dollar denominated assets as well. But Brazilian equities, why this link? And it's, as I said before, gold is the easy market to perhaps understand. It has lower volatility. It's got a ton of history, and central banks tend to own the asset, and so when you see central banks buying gold, for other investors, it's a lot easier to get behind that thesis as they start making money or benefiting from the rising gold prices. Everyone, as an investor, starts thinking, "What's the next one? What's the next gold?" And usually, you start looking at historically or historical correlations, and the first thing that comes to mind is miners, silver, and therefore why you have some connectivity in markets. And one of them are things that are knock-on effects of the gold price that usually are not as obvious. Canadian dollar, Brazilian markets. Why? Because they have high exposure to natural resources as well. Let's go to the next chart. Here's another interesting one. Platinum, of all metals, platinum. And Brazil is not an exporter of platinum. Why in the world? The platinum chart is almost exactly the Brazilian equities chart. The only way I can explain is the way I just explained is as we go up on the risk curve as investors, you start with gold, and then you go to the miners, and you go to silver, and then you go to platinum, and then you go to palladium, and you go to Brazilian equities. You keep going down that trend. Ultimately, the money flows down. And the same people that told us that gold would never move are now telling me as well, and Kevin as well, and Quinton, that the exploration stocks and the junior equities or the smaller, earlier stage companies in the mining industry will never, that money will never trickle down to those companies. I don't believe in that. I believe in history, and I think we're getting close to this. Let's go to the next one. The next chart, you can see that the copper price has also been leading the market potentially in Brazilian equities. You can see here the link as well. In the early 2000s is very strong when copper was taken off, and then Brazilian equities has started to attract more capital. And that makes more sense because Brazil does have a significant amount of copper. It has a very close relationship, of course, with iron ore and energy and agricultural commodities, but base metals is a big exposure for Brazil, and so that makes more sense. But think about that, that sort of resistance line in Brazilian equities we've seen for so many years, potentially being broken out here very soon because of all these other markets already leading the way. That to me is the relevance of all these connections. Let's go to the next chart. Next chart. Now I'm going to talk about one thing that I think it's also. I don't usually talk about single name in presentations. I shy away from that because, well, first I leave it to Quinton in that front. Sometimes we talk about Mag 7 names specifically, but in this presentation I'm going to mention one specific name. One thing that everybody I think should know and probably knows about it is that when you look at the price of most assets, they tend to be aligned with earnings, not only earnings, but estimates for earnings. And so what you're seeing on the screen is earnings in blue and prices in white for the Philadelphia Gold and Silver Index. And what you find here is that there's a very strong connection. When estimates go up, the metal prices or those companies tend to do very well. That makes sense, right? Well, let me show you the next chart then. Let's see the next chart here. All right, the next chart now you're showing Barrick mining, of which is in a very important technical setup. And you see this blue line showing the estimates of earnings for Barrick. It's been just going up and up and up. And at the same time, the share price has been languishing for good reasons, by the way. There's plenty of reasons it's been mismanaged for a long time, in my opinion. But there are times as well when the gold cycle, can save a lot of mismanagement. And so maybe that's the case here. That's certainly my belief. If we go to the next chart, what I find interesting about the Barrick technical setup is that when you draw a line, there's a resistance on the monthly candles that we just broke out just recently. And so when you tend to see these types of setups, the same way you see with the Canadian dollar, the Brazilian equities, platinum that recently broke out, silver used to look like this, and now it's broken out already. I think it's remarkable because usually you tend to see, a momentum that tends to take place in those situations. Again, I don't have a crystal ball that's going to be the case. I'm just using history as a guide here, and I'm also looking at fundamentals that have been improving. If you go back, just go back a chart real quick. You can see that the blue line is your fundamentals in that case. That clearly is improving in a large way, and potentially, if the white line is supposed to be really following the blue line, then a major breakout would make a lot of sense. So that's the rationale behind all this. All right, let's jump to two charts now. There we go. Silver, I think this is the chart of maybe the last few years. I find this chart fascinating because it's just very close to a major breakout of a cup and handle. There's some issues with technical analysis, but I love historical cup and handles because they're usually very strong uh, tendencies that tend to be broken, and so we're really close now to the 40 handle in silver. Once we break down from that, of which I believe we will, we're probably going to get to a price discovery moment, and that's where it gets really interesting, where nobody knows where it goes. But again, we're just using a chart, looking at technical analysis. We have very high conviction on the metal. We believe it's probably the cheapest metal on earth for fundamental reasons. Um, Silver is used as monetary purposes, but also as industrial metal too. And as money managers, we've always been looking for different ways to find exposure to silver. And so let's go to the next chart. And this is another one of those that it doesn't, I think, logically makes sense, but I wasn't aware of this link that the US dollar, which is in blue, now we're looking at DXY index, so it's the dollar versus other fiat currencies, large weight in the euro and the Japanese yen, the British pound, and some others. And the white line is the gold to silver ratio. So remember what I said. Usually, when you have this tendency of the dollar tends to turn uh, down when the gold is taking off, makes sense to see this relationship between the dollar versus the gold to silver ratio. Why? Because once gold really takes off, what you tend to see is that silver takes the lead. And so the gold to silver ratio tends to contract. So if I'm a believer that the blue line is likely to fall, I by almost by definition also a believer that the white line is going to be under pressure. So that's certainly the case here. I think all of us in this presentation believe that the gold to silver ratio at these levels is truly unsustainable, and so we believe that that's going to also fall substantially here in the future. Let's go to the next chart. I'm almost done. This is another chart that I think puts into perspective how much where silver could be in terms of undervalue or overvalue. And I like to look at silver relative to money supply in one way. And this chart is fascinating to me because if you go to the next chart, you can draw a line that shows that maybe we can see a breakout from this line. Breakouts they become a lot more obvious, after fact. But I like to, I think Paul Tudor Jones has a sentence that the whole idea of investing is investing before a breakout, not after. And he is, to me, is one of the smartest technical traders out there. So to hear that from him, I often hear the opposite strategy, right? You see the breakout and then you start investing. To me, that makes zero sense. I always like to find an idea that from a macro and fundamental standpoint are very compelling. And then you have these types of ideas where if you are of the view that the white line is going to break out at some point, I believe investing early is always a good idea. That's just my view in the way we invest at Crescat. But look at this other relationship. Did I remember I said this connection between different markets and so forth? Well, you're looking at silver adjusted to money supply. Let's go to the next chart. Oh no, I don't have it. Let's go to the next chart. Is that the last one I have? Oh, too bad. Well, let's go up two charts. I'm sorry. Apologies. Go back to the silver chart again, if you don't mind. the silver. Yeah, there you go. Well, I don't have the other one, but basically, if you look at the gold chart adjusted for money supply, we just saw a breakout in the gold chart that happened recently, and it's exactly the same chart, but the white line, is already above this resistance that we're looking at the chart right now, and to me, that's what is likely to happen with silver as well. My last chart is something about equity markets, of which I wanted to just point out. Global equity markets total market cap relative to GDP is at about 120% today. When was the last time we've seen this? Only one time, and this was in 2021 at the very peak of the market, when a lot of people said it's very obvious that we were in a bubble. Well, we are in a bubble now too, and nobody sees us as obvious. And so I find that also fascinating because we're well above where we were back in the early 2000s. Kevin has a good chart that shows market cap to GDP of Mag 7 companies. And the usual elephant in the room that people love to address is, but Kevin, you're just looking at a bunch of companies that have revenues outside of the US. Why are you looking at US GDP? Well, I'm addressing the elephant in the room right now. I'm looking at global market cap relative to global GDP. What's your next excuse? So there you have it. And what I also find important to point out is the 1929 levels. We're twice that level almost today. Of course, it was, twice would be close to 130%. We're at 120, 117. I think this is really extreme. I like markets that are cheap, and I don't think that's the case here. With particularly, remember, keep in mind, 70% of the weight in equity markets globally is today coming from the U.S. So, if you think this is expensive, you got to think about what's the source that is making this so expensive. It's coming from the U.S. That's the bottom line. So, anyways, this is the final chart. I'm going to pass it on. I think it's Quinton now who's got to record a presentation that he would like to do. So let's get started with that.
Hello, everyone. Welcome. It's Friday, June 20th. I am doing this via recording, kind of making this a common practice because I am very busy. I find myself very busy with the turn in the market here. Things are getting busy again, and I find myself pulled away on numerous trips. I'm actually heading to Japan on Friday morning, so I'm recording this Thursday evening. And if I, for some reason, miss something big on Friday and people wonder, why didn't he talk about that? Well, it's because I'm on an airplane, basically on my way to Tokyo. But this week, I have a topic that I think is appropriate, that we're gonna discuss a number of companies. And I limited this to 30 slides. I find that if I try to go over 30 slides, it gets a little long. Even 30 slides can be a bit long at times. But what I've decided to do this week is talk about a lot of companies that we'll say are back in the saddle. Okay, they're back to drilling. Cash is starting to show up in this market. So these companies are able to go out and finance. They're able to get back to exploration. And I kind of want to reset the tone or the expectations with investors here, at least people that watch us, around some of the stories I've talked about in the past. Because I think as the market picks up here, it's going to get more and more exciting. There's more and more things to look forward to. We're starting to see drills turning again. We're starting to see really these exploration stories, the theses that were very solid a couple of years ago, but ran out of money. They're starting to pick up steam. Okay. And am I going to talk about every single one of them today? No, I'm limiting it to 30 slides today. And there will be some that I don't talk about this week that I can talk about on subsequent weeks, but I'm going to kind of plow through a series of companies here, one slide each. Okay. One slide each. And I'm going to talk about where they're at, where they're heading, what their plans are this year. If there's an update, I'll mention that. But I really want people to start thinking about, hey, maybe it's time to relook at some of these stories that we know so well. So again, our thesis here at Crescat is go big or go home. We like to invest in exploration stories that we feel have very large scale potential. They're going to be desirable as buyout targets potentially for a big mining company, say in the future, something like that. That's the kind of exploration company that we invest in, and we do put our money where our mouth is. We help support a lot of these companies. In fact, we've helped reinvigorate a lot of these companies even recently, with cash injections, and others, of course, alongside of us. But we really have done our best to support a large number of exploration companies in the junior market. So let's talk about some of these. Let's go to the next slide. First of all, Alpha. I haven't really talked about Alpha for quite some time, and that's because they have not had the resources to go out and drill, do their work. But basically, they are back in the saddle, and they are drilling at Aberna. But guess what? Anagulu, the first project, this copper gold porphyry target that we actually came into Alpha based around, is going to become a theme again. It's going to become a live thesis. They've done a lot of work around Anagulu to show that they think there might be a viable target there. Very good copper gold grades in the early days. And, the drilling that was done back in 2021-ish, in that period, it didn't quite demonstrate a major discovery. It kind of left everyone scratching their head, like, where does this thing go? I think these guys might be onto something, and we're going to see if they can chase it down. So they are going to be drilling at Aberna, hopefully with new ideas in mind that lead to discovery. And now that's on top of Anagulu, I should say. That's on top of Aberna. Aberna, which is the gold project, they already have what I think is a justifiable discovery, a lot of 100+ gram meter holes, as we know, and they're really going to be drilling more to further understand it, but they do have what appears to be a live system here. So, Aberna seems to be a bird in hand, hopefully, in terms of discovery, but this Anagulu project, copper gold porphyry, might once again kind of resurrect, come up from the ashes, and see it like the phoenix here. All right, let's go to the next slide. Altamira, they've done a good job of keeping some momentum going, some degree of momentum going. They have the Maria Bonita porphyry target at Quechero, and they did put out a resource around that recently. In fact, they filed that resource here just a few days ago. You can see the NI 43-101 technical report was published, and it was around that resource of indicated and inferred that totals about 720,000 ounces of gold. Yeah, it's low grade, but it is metallurgically very friendly, and it's part of what appears to be a much, much bigger system. I know that the company has a large number of targets further identified across the property. Using the inverted cow model, we see a number of apophyses, basically fingers of intrusion that are poking up. That might tell us we have multiple discoveries. Don't forget, in the central zone already, there's about a 600,000 or 700,000 ounce resource, which is on top of this. So we're already north of 1 million ounces here. But what's really cool is there is good evidence there's more of these targets, but also that there's more aerial extent to things like Maria Bonita. And I think what we're going to see is the company further drill at Maria Bonita to see if that grows. But we're also going to see them subsequently test a lot of these new targets, see if they can kind of build up a critical mass here. What do I think is present? Look, it's hard to, just conjecture, arm wave around these things. But, I'd say with the 5 or 6 different fingers of porphyry they have coming up here, that there's a good shot this could prove to be a multi-million ounce system. Metallurgically friendly, that's great. That means it can, likely be a viable deposit. Don't forget that in Brazil, there's a very well-known deposit, Paracatu, belonging to Kinross. It has similar grades, and it is a mill operation. Okay, so that's an example of what can be done in this kind of environment. I'm really glad to see the company kind of pull it together. They're evidently doing a raise. We don't talk about raises per se on the video here, but what I would say to people is that it's probably time to start looking at Altamira once again, because I think they'll be able to start work here soon, and this might be a good entry point for investors. So just my 2 bits. Go to the next slide. All right, Blue Lagoon. This is not really so much an exploration story as it is a development story at this point. Blue Lagoon managed to pull off getting a permit to operate the Dome Mountain mine, which is basically a high grade vein system that is already in resource stage. I think there's a bit over 200,000 ounces in resource, very high grade. It's something around half an ounce per ton. And this deposit is going to be developed and then toll milled through the milling operation at Nikola Mining, as you can see here. In fact, Nikola put in money into this placement. So I think there's a lot of energy behind this story. A lot of investors want to see it succeed, including Nikola, who is going to be their partner in terms of processing this material. Okay, they have the money apparently to get this into operation. They have a targeted start date of early July. I anticipate being at site during the opening of this. I'm very anxious to see the deposit firsthand. I'm also interested to see where the company thinks that the exploration side of the story might resume. Okay, the gold market's picking up. Maybe this is time to start thinking once again about exploration. And I do think there's a good upside here at Dome Mountain and the property surrounding. All right, so let's hope they can pull all this off. Another one to keep an eye on in the coming weeks. Let's go to the next slide. All right, Brixton Metals. It's resumed drilling up at its Thorn copper gold project. As we know, there are porphyry copper deposits here, copper moly, I should say, a bit of gold in them. But there's also what appears to be an alkaline gold system, in particular Trapper. I think that Trapper gold project, in my book at least, it looks like an alkaline gold system, and it looks quite interesting. And the company has plans to test both some new targets around the Camp Creek area as well as gold mineralization at Trapper. It's a modest program this year. You can see 8,000 to 10,000 meters, but they're going to test numerous targets, and I'm quite anxious to see if they make new discovery, particularly around the porphyry, new porphyry targets that they've identified around Camp Creek. Usually porphyries occur in clusters. I think there's multiple porphyries here. I remember flying up the valley above the Camp Creek discovery a couple of years ago when I was at site and seeing the huge alteration systems up the valley and thinking, gee, there must be more of these porphyries tucked in here somewhere. So maybe we'll find out this summer. So another story to watch over the coming weeks. Go to the next slide. Condor. Okay, it's been ages since news has come out of Condor. Permitting in Peru has been slowed down, but they seem to be accelerating once again. I don't know what the deal is in Peru, but things are either glacially slow or all of a sudden they move very quickly. And what we're seeing are DIAs. These are basically drill permits get approved here recently, and one of those is for Cobre Orco, which is one of the highest quality assets that Condor has. It is an earn-in joint venture with Teck Corporation, and you can see Teck has successfully got their DIA, so their permit, so that they can now drill at Cobre Orco. I would expect them to start drilling sometime in the not too distant future. We don't know exactly when, but this is an exciting moment, and it really does kind of light a fire underneath Condor. Once again, we are awaiting that permit for the expanded Pucamayo operation as well. We do have the permit for Huayna Punta as well, and we might actually be able to start drilling there in the not too distant future. All right, so Condor, it's coming back to life slowly but surely, and we're very anxious to see Cobre Orco drilled. Of course, this is a giant copper gold porphyry target. It's a very large scale target. It's in the right neighborhood alongside many other very large systems, and quite frankly, Teck eyed this as a potential large scale discovery. So we're quite keen to see our partners here, Teck, get in there and start drilling. Let's go to the next slide. Eloro, again, a company that's raised some money recently, and they're back to work. They've announced, this is a little dated, this is a little over a month old, but they've announced the restart of definition drilling. This is really encouraging. I haven't seen any new results out of the company here yet, but I wouldn't be surprised if sometime in the next couple of weeks we start to see some news trickle in from the restart of this drill program. And I think they're doing the right thing here. They're infill drilling some of this higher grade silver base metal mineralization, but also testing the tin discovery that's immediately adjacent to the west. And I think that the company has a right vision to build up a critical mass, basically a resource base that could underpin a very robust mine case. I think the infill drilling is going to help them demonstrate improved grades, improved continuity, things like that. And this is a story, especially with silver. Think about it, silver pushing $37 again. This is a story to keep an eye on. All right, so let's wish them luck. Let's go to the next slide. Eskay. Eskay's back in the saddle. Our geologists are heading out into the field. In fact, I think they're on their way right now. We have a geologic team that is very savvy in this area in terms of prospecting. They've got a long track record, both here at Eskay, but also in adjacent properties, like the Brucejack property. So these geos have actually worked in other locations in this neighborhood, and we're very excited to see them follow up on the high-grade mineralization that was found at C10 Vermilion and the Ted Morris area, the TM zone. These are places where last year, in a very short window, they went in, sampled, and they found some extremely high-grade gold veins. What are they? Well, they look a bit like the veins that one might see at Goliath, for example. They're kind of quasi-orogenic, maybe a bit intrusive-related veins that appear to occupy relatively flat structures, but be very expansive. Like there's a wide distribution of these things. As we know, there was a huge Bleg anomaly that was revealed. This is golden stream anomaly that was revealed a few years ago when we did work in 2020, 2021. Now I think we have an explanation for what that Bleg anomaly is, and these guys are going to do the first real serious follow-up work on that target. Hopefully they get to a point where they can actually define some drill targets by late season, and maybe we see what we did in 2020, a situation where once drill targets are identified, we do try to drill a few holes before the end of the season, which usually is about early October in this part of the world. All right, so exciting season coming for Eskay. Let's go to the next slide. Goliath. Look, I talked about Goliath kind of hitting the ground running a couple of weeks ago. They did hit very quickly. They hit an intrusive, looks like a reduced intrusive of some sort, which has quartz veins with specks of visible gold. And that was the big news just immediately, after the start of their program. They hit 26 meters in which they saw quartz veining with specks of EG. But what's more important now, I think, and people should understand, is they have a very aggressive drill program this year. They got, I think they're talking about drilling up to 60,000 meters. I mean, think about that, 60 kilometers of holes in this country. And you might say, well, gee, how do they do that? That's a lot of money. It is a lot of money. It's about $550 all up to drill 1 meter of core in this terrain. Okay, but they have in their bank right now, I think on the order of 46 million Canadian, something like that. So this is one of these companies that is truly well cashed up and is ready to implement an aggressive drill program this season. I've seen just from the news releases the images of their planned drilling and how they're going to approach this with a focus on following up on high grade. Okay, there is a big push to follow up on high grade. I think that's a wonderful approach, and I'm very anxious to see what the company comes up with this year. I think we will see an absolute torrent of news out of these guys. Let's go to the next slide. Okay, Hannan. I've talked about Hannan multiple times over the past 2 or 3 months because they are very active in Peru. They're kind of up in north central Peru on the east side of the Andes in an area where there's really no history of mining or exploration. This is true greenfields exploration. And they have identified a whopping big gold system at Provisto, but they also have a copper gold system at Belen that they're currently drilling. So they're drilling right now at Belen. They haven't had an update here in the past couple of weeks, but you can see this news release comes from just at the beginning of the month. They have an ongoing program at Belen, which is the last bullet there in the slide. But you can see the news that they have about extending and expanding the gold target at Provisto. So and that one in my book is very, very interesting. It looks like a large-scale alkaline gold system. It is completely untested, really no history of prospecting, mining, anything. It was found through good old grassroots stream sediment sampling, Blake sampling, in fact. And I think the company is going to have a very exciting couple of years. Okay, so this is one to keep an eye on for a long, long term. When might they get the drill permit for Provista? Look, they got the one at Bellin in about 6 or 8 months. Can they do that at Provista? Perhaps. Okay, so maybe we see that permit come in 6 months, 12 months. I don't know, something like that. But when they test that, I'm going to be there. I think this is one of the most exciting gold stories in the exploration world right now. Let's go to the next slide. Okay, Inflection. As we all know, Inflection Resources has a joint venture, earn a joint venture agreement with AngloGold across a very broad base of prospects in New South Wales. They're all porphyry targets, porphyry copper gold targets that are buried. They're part of the Macquarie Arc, and that terrain through there is kind of flattish. It's been buried by a thin veneer of cover rocks. But Anglo is currently diligently exploring that portfolio of targets. As we know, Duck Creek in particular looks like perhaps an incipient discovery. Be very anxious to see. I wouldn't be surprised if we wake up one day and see that there's a discovery there. But on top of that, recently Inflection signed a deal with Newmont to acquire a portfolio of copper gold exploration opportunities elsewhere in Australia. You can see that they've got some in Northern Territory and New South Wales. Tennant East, which is up in the Tennant Creek area, it's part of the Northern Territory. It's up in the north west part of the Northern Territory. It's an IOCG camp, and it has smallish but discrete high-grade targets. The district is well known for producing very high-grade copper gold discoveries. And these guys have one of the choicest land packages in that district. And it's very interesting. I was down in Australia a couple of weeks ago, and one of the discussion points was that Tennant Creek seems to be garnering a lot more of attention lately. So for these guys to pick this land package up right in the middle of a district that looks like it's really starting to get some attention here, I think is a coup. And I would say that they might be in the driver's seat when it comes to consolidating a greater district. They also picked up this Bell River project, which is part of the Macquarie Arc. So this is basically the same neighborhood as the projects that they have with AngloGold, and they do have some more porphyries in this particular case. How are they going to treat those? Maybe they add them to the existing earn-in joint venture agreement with Anglo. I don't know, but they're further high quality exploration targets down in the same terrain in New South Wales as what we already see the company working on with Anglo. All right, so this is quite exciting. Very good move on their part. It's good to pick up projects like this in an upticking market. All right, let's go to the next slide. Okay, Irving, this is actually why I'm going to Japan. I was very excited about the results out of recent drilling. This is up at Omui, which is part of our Omu gold project in Hokkaido. We're doing some shallow drilling with our earn-in joint venture partner, JX Mining. JX happens to be the largest mining company in Japan, and we're delighted to have them as partners because they have a very serious approach about drilling up Omu and Omu Center and Omui to a point where we could potentially build a smelter flux operation. Okay, so our goal is to find silica-rich rock with gold and silver credits that could be used as smelter flux in the various smelters across Japan. And we're starting to see that. The results from a recent hole that you can see here tell us that we have a very expansive silicified system, shallow, that could meet the requirements we're looking for. Okay, so I want to go see this firsthand. We're drilling more holes right now. We've got, I think, 4 more holes that have either been drilled or are being drilled right now. And I think we're going to see many, many more results like this. So I'm very anxious. I am going to go to Yamagata as well. That's in the south of Japan. It's down in Kyushu. And that's our Hishikari analog. There is a hole being drilled there right now, which is, in my book, a bigger step out. It's a real big test of the geophysics and expression of the underlying hydrothermal system at Yamagata. and I'm very anxious. I hope that when I'm there, they're kind of down into the critical part, the targeted depth, we'll call it, of that hole, and I hope to see something exciting. So I will see this firsthand. Irving, cashed up, ready to go. They've got great joint venture partners. Should have a lot of news coming over the next few months. Let's go to the next slide. All right, Intrepid. I think they raised money earlier this year, and they are out drilling again. So they're drilling at the Corral Copper project in Arizona. And already they've hit a very interesting interval. You can see 142.3 meters of a 0.5% copper. And there is a bit of gold. Okay, there's 0.17 gram per ton gold, as well as a sniff of silver. And there is higher grades within that. You can see some of the sub-intervals listed down below there. Okay, this, in my book, is not a porphyry system, which most people look at Arizona and think, this must be a porphyry copper system. It's not. It's something different. It's more likely some sort of IOCG type system, and I'm glad to see this drilling being done, because this hole appears to be a true exploration hole where they're stepping out, looking at new extensions of the mineralized system, and they're starting to see extensions of that what's already known. I really encourage the company to continue pushing exploration and trying to expand this system, which I hope they do with this cash they have in hand. But this is a good story, good location, and it's the right time in a market for a new discovery, or a bigger discovery, we'll say, of copper gold in a great jurisdiction like Arizona. All right, so another one to watch. Let's go to the next slide. Juggernaut literally is a juggernaut of cash raising. They have raised a very large sum of money. I can't remember exactly how much it is, but it's more than sufficient to tackle the Big One project aggressively this year. Big One is up in the northern part of the Golden Triangle, so it's almost a polar opposite end of the Golden Triangle from Goliath, but it seems to be a very similar system. There are gold, silver, rich polymetallic veins. Again, they're kind of somewhat flat, but they're thick. They're multi-meter veins, and they have a very expansive expression, like they're distributed over many square kilometers. These guys are totally stoked. A lot of the same team members of Goliath also work with Juggernaut, and they say this is every bit as exciting as Goliath. Has it been drilled yet? No. Okay, but they're going to do a lot of field work this year, sampling, mapping, and develop those drill targets. The company did mention it's drill ready up in there in the title. It's not quite. Okay, really what needs to happen here is they need to do some geology and define the drill targets before they go in and say it's drill ready. Okay, they also have to get some permitting done for whatever they deem a drill target. So we got to be a little bit patient. Can they drill later this season? Perhaps. Okay, that's the hope. Maybe it's next year, but it doesn't bother me one way or another. I think what we'll see out of this story by the end of the season is a lot better knowledge around the extent of this vein system, the grades that they see in these veins, and their width and orientation and so forth. Maybe they get a few drill holes across it, but maybe they also get some vertical channel samples across the veins too, which is equally important. All right, exciting story. Maybe it's the next Goliath. We'll see. Let's go to the next slide. Kingfisher had, as we know, they did a hard pivot away from the what was it called, Cloud Break project, I think it was called, which was further south in BC. Now they're up in the Golden Triangle, and they have their Highway 37 project, which is in the Golden Triangle. So this is kind of a north central part of the Golden Triangle, not too far from some other well-known porphyry districts like the Kerr Sulphurettes, Mitchell, KSM area. And the geology of this property looks very, very similar. It's also got some similarities to analogs like Galore Creek, which is in the neighborhood too, even Red Chris, which is not too far away. All right, so Kingfisher has done a very good job of assimilating a very high quality land package here, and they have got early targets identified, we'll call it. But I think their plan this year is to get in there, do some boots on the ground work, and then further refine their targets so they can do some drilling this year. I think they're going to actually test a number of targets on the order of 4 or 5, I think, or something like this. All right. They're looking for copper, gold, porphyries, maybe some epithermal mineralization associated with those, but they are big systems, and I'm very, very hopeful this company can make a brand new copper gold discovery that we all want to see right in the heart of the Golden Triangle. Let's go to the next slide. All right, Mogotes. I talk a lot about Mogotes. I'm very excited about this. This image sums up what they're seeing at, in terms of high quality targets. This Los Mogotes porphyry target, which is immediately on trend and immediately south of the Filo del Sol project, the Aurora deposit, essentially, looks very, very intriguing. I talked about this a week or 2 weeks ago, rather. The reason I bring this slide back to everyone's attention is because the theme of today's talk is let's start focusing on companies that have, a compelling story that is going to unfold over the next few weeks, few months, maybe a year or two, as this market turns around. And I think these guys, first and foremost, they have done a really good job raising money here recently. They got some strategic investment in very, very recently, and they will be in a good position to start work once the season commences again, and that's later this year. Now we're in late June, so we're about 2 months into the winter cycle in South America. I would say give it about 3 or 4 months, and they'll be able to start work again. So spring comes September, October, something like that. And I think we'll see these guys in a very good position, both cash-wise and technically speaking. They have the goods. They have the targets identified. I really hope that late this year, early next year, we see Mogotes be an equally exciting discovery to Filo del Sol, but perhaps even like NGEX's recent discovery up to the north. So look, this is elephant land. They've got an elephant scale target here. They actually have more targets across their property, but this Los Mogotes is just one to die for. All right, let's go to the next slide. All right, Newfound. We got new personnel in place, development type people. Paul Hewitt, of course, as the chair. And I did talk to Eric about Newfound. I think it was probably 3 or 4 weeks ago. He's very excited that Paul's in place and that the rest of the team there, Keith Boyle and so forth, are in place, because now the project can move towards development. And I think in spite of the resource, which I commented on being a bit underwhelming, and I think perhaps even understated, at least my view, I think that the company's now in a position to advance this thing and do the right thing, demonstrate to the world that this is a super high quality gold asset that can be developed. And you can see that the work they have outlined here, this is the 25 work program, is geared towards the development side of this. Yes, they're going to do some drilling, no question. They have to. They got to infill and better understand certain things. But most of the work they have listed here is geared towards developing a PEA and doing baseline surveys and other work that has to be done in line with permitting a project, making it move forward. So kudos to them. I'm really excited. I think over the next year or two, this is one where we could see it move towards development, kind of come full circle in the Lassonde cycle, right? All right, let's go to the next slide. Okay, Novo. I was in Australia. I mentioned John Bull as my favorite target at Novo a couple of weeks ago in the recording I did from Australia. I reiterate it here. I looked at the data with my team and stuff, and I'm really excited about this prospect. Okay, John Bull is in New South Wales. It's northeast New South Wales, so it's opposite side of the country from Perth, but it is a reduced intrusive type system. It's almost like what we see in the Yukon. Okay, it's very similar geologically, but it's in Australia, in an area that I think could host a very large gold deposit. The footprint of anomalism here, the soils and stuff, really smell like it could be a very, very robust gold system. And I can't wait to see these guys drill. I would expect within the next 2-3 weeks, we start to see drills turning here. And at that point, I'll hopefully be able to provide more update. But exciting restart to exploration at Novo. Let's go to the next slide. Onyx Gold. Onyx, of course, has projects in the Yukon, but they also have their Monroe Croesus project in near Timmins, Ontario. So this is in Ontario. And they have done a pretty hard pivot. They're focused like a laser right now among Munro Croesus because of the discovery they had. They had a very, very good hole not too long ago, the 3.4 grams over 69.6 meters. That's a tenth of an ounce of gold over nearly 70 meters. That's pretty darn remarkable in my book. And it is a new target. It's basically a new structure that was identified that's kind of subparallel and below the known gold structure on the property. And quite frankly, the company feels excited enough that they got a second drill turning here. So this is a story that might unfold over the next few weeks, few months. Maybe, who knows, maybe we have another great better or something like that on their hands. Can't promise anything, but it does look very, very interesting. I like to see grade in the system, and this one certainly smells like it's delivering grade. Let's go to the next slide. All right, Rackla. Rackla is they've just announced that they're back in the mobilizing crews and getting back in the field. What is their focus this year? Well, it's this grad target, which is reduced intrusive gold target. So this is a valley-like target. And looking back at the photographs that they released late last year after coming out of the field, this is really compelling in my book. I mean, this is just a massive granite intrusion that is riddled with little sheeted quartz veins. They did a channel sample across this thing and got some really nice numbers over a long run. Is it a guarantee? Is there any guarantee in life? No, there's never a guarantee. But boy, this one looks compelling. It's something just my spidey senses say they're onto something here. I'm very excited to see them back at work, and I'm trying to figure out if I can get to the project actually in a visit that I'm going to make to the Yukon mid-July. So maybe if folks from Rackla hear the video here, they can help me try to organize. But I got a little window there around let's see, what is it? I was doing it just a minute ago, but about the 16th, 17th, somewhere in there. No, 16th. Sorry, 16th. I can come out and see grad. All right, next slide. All right, Red Canyon. They have several projects. Red Canyon is exploring for porphyries in multiple locations in BC, even down in the U.S. The one I really like is this Kendall project, which is near Terrace. Okay, they did get some interesting results. Hundreds of meters of subeconomic but very interesting mineralization. And the alteration and the mineralization in these holes looks like it's just peripheral, like just beyond the core of the system. So what are they doing here? They're doing MT work, which is basically a geophysical technique to better identify the core of the system, the higher grade part of the system. I want to see them, focus on that and then drill it. Like this is an exciting target. It's in an area that's kind of off the beaten track for porphyry, but this one smells like it could be a big discovery. I'm very anxious to see the company follow up on this. And it looks like this year we will get the MT results, but we might also see them follow up with drilling. Okay, so yet another story we should keep our eye on. Again, they've got some money to play with again, so kudos to them. Let's get back in the saddle. Let's do some work, guys. Let's go to the next slide. Silver 47. And for those of you watching, you probably notice I'm doing these alphabetically. Okay, so if you're on YouTube, you can actually scroll through A, B, C, D, E, F, G. Okay, anyway, Silver 47. This is a story that we first invested in a few years ago based on the Michelle project, which is in the Yukon. It was a very high-grade silver project. But because of some permitting issues, that project was not able to advance. Subsequent, the company decided to look for other assets. Silver basically was their focus. I pointed them to the Red Mountain project, which had basically gone into receivership. It belonged to White Rock, but White Rock unfortunately collapsed during the downturn a couple of years ago, and Silver 47 picked it up out of receivership, brought it back to life, and they are now following up on all of the exciting tests, all the targets and tests that White Rock missed out on. Okay, so I really see this as one of the more exciting silver stories this year. It's a good, robust program. I think they'll actually expand their program. Why do I say this? Well, I don't have a slide on it, but one of the things Silver 47 is pursuing right now is a business combination with Suma Silver. So you're going to see a combination, combined company here that's going to have this project, Red Mountain in Alaska, but also two other key projects. One's called Mogotes, which is doesn't look like it's spelled that way, but it's Mogotes is how you say it. It's down in New Mexico. It's a district I know well. It's a very large scale epithermal silver district, silver gold district. I love Mogotes. I've always loved it. That's going to give them a target to work on year round, but they also have part of the Tonopah district out in Nevada. So now Silver 47 is basically agglomerating together a collection of projects, targets, projects that can be drilled year round. And that way they can get away from that danger of being a seasonality company, with an Alaskan story. And I think that's a good move. It gives them something to work on perpetually. I wouldn't be surprised. I know just from talking with management that their goal is to grow the company into one of the more formidable silver stories in this silver market. So here we got a great story here. I'm very anxious to see what they come up with in this drilling, but also now we got Mogotes. Now we got Tonopah. Even better. All right, let's go to the next slide. Okay, Sitka. This is a bit of an update, but also a bit of a rekindle of the story here. Sitka, of course, is working on the RC gold project in the Yukon. This is one of these reduced intrusive gold systems, and they have a number of targets. The inverted cow model comes to fore here. This is one of these large-scale reduced intrusive systems where there's different hypotheses of intrusions that have come up, and basically each individually form a gold system. And the question is, how are these things all connected? Are they all tied together? The udder of the cow, where is that thing? All right, now they've done some drilling recently, and they're going to do a lot more drilling this year because they have a 30,000 meter fully funded program. So again, one of these stories that we need to keep an eye on. But they've done a good job demonstrating the scale of this system. One of the things they did recently was extend one of the holes that you can see in this image, the one that's slightly darker here. Excuse me. Hole number 76. They extended it to a bit deeper depth, and they actually hit more gold mineralization. In fact, they hit 65 meters of 2 grams at depth, and that included as higher grade interval 6.3 meters of 5.5 grams. Notice that this hole actually ended in gold mineralization. That's one thing I would point out. And if you look at how the gold is distributed going down the hole, you can see usually when there's a few pops and whistles, they're getting into a new gold system. It kind of leaves you wondering, maybe there's more gold even further down. I don't know. But it does demonstrate that everybody's perception that the gold system was shut off in that hole is incorrect. Okay, this hole had a good interval of good gold, deeper, and once all that's tied together, you can see we have hundreds of meters, like that looks like maybe 600 or 700 vertical meters of gold mineralization along that reduced intrusive dike or vertical body. This is a big gold system and good grades too. Okay, can it be mined bulk underground? I think so. I personally think so. All right, and that's the prize here, at least in this particular target. This is the blackjack target, but they are drilling now over at Eiger and also in the saddle zone between the two. I think, and given what they're talking about in recent news, I think we're going to see a connection between all these things. Okay, that udder is still the prize here, right? 30,000 meters. Let's watch how this unfolds. I think this season will reveal perhaps a very, very large gold system that could be one of the bigger reduced intrusive systems in the Yukon, to be frank. All right, so exciting, just like Rackla is exciting. Rackla is a bit earlier. This is exciting. All right, let's go to the next slide. We're getting there, I promise. Okay, Snowline Gold. They put out a news release here just today, actually, talking about additional team members that are being brought on. This is a company that's gearing up for taking the project forward through development, quite frankly. I mean, we got some high caliber personnel coming on the operational side. Not to say that Scott isn't high powered. Scott is one of the best CEOs I've ever seen in my career, but he knows to bring on good, solid people to work around him. And I'd love to see the company make these steps. I do think this is a company maker in terms of a discovery. It's one of the few that we've seen in recent years. It would be just a delight to see this story unfold as a company maker. Okay. Can it get taken over too? Yeah. Maybe somebody comes in and takes it over. Who knows? But as a standalone project, I mean, these things come along very rarely. Okay. And one of the most exciting moments that we're being told is coming is in this news release. You can see down there, they've actually announced that the preliminary economic assessment, they're going to have a webinar, basically. What is it? 6 a.m. Pacific time. Boy, Scott's going to be getting up early for that one on Tuesday. So I would say news is going to be out probably early next week around the PEA. Not very often you see a gold company announce they're going to announce the PEA. In other words, usually people don't broadcast it, but they must be just super confident here. Like you know, to see that announced like that smells like this is a winner. Okay, so I'm very anxious to see where this thing lands. I think the economics are going to be robust. We'll see. We'll see how robust they are next week. Okay, so let's hold under our hats here. Again, the company's got lots of cash. They're drilling. They're testing new targets as well. This is a story that's growing. Don't forget that. All right, let's go to the next slide. All right, Tectonic has launched their program. This is up in Western Alaska at the Flat Gold Project, and it is a reduced intrusive system. Even though most people, don't think of the reduced intrusions in the Yukon being part of a broader belt, it is. In fact, Fort Knox, which is near Fairbanks, is part of that belt, but we go clear over into Western Alaska, into the Kuskokwim region, and we have projects like Tectonics here, this Flat Gold Project, which is a classic reduced intrusion. These guys hit a very interesting interval of I think it was like 60 odd meters of nearly 1.5 grams late last year, at the end of their season over in Alpha Bowl. This is a geographic area where there's a broad scale placer operation in a shallow basin. It is really the center of gravity, the ground zero for gold in that district. And for them to hit a reduced intrusion with gold veining in it is really encouraging. And I think one of the first and foremost objectives they have is to get out there and retest that area. I think they're going to drill some holes in Alpha Bowl here, as well as other targets. But, that Alpha Bowl area, who knows? Maybe they come up with a new valley type discovery here. I'd be just absolutely tickled to see yet another discovery of that ilk made this time, albeit in Alaska. But go guys, go! You got money. Let's get her done. Let's go to the next slide. All right, Westward. I talked about Westward last video, which is a couple of weeks ago. If you want to go back and look at that. They are gearing up now. They've actually gone out and they've broken ground at the Campfire target, and they're getting ready to drill in the Toyabe Hills. And this is in north central Nevada. It is a Carlin-type target. It's a target that I spoke about in the video a couple of weeks ago. It's one that I'm very compelled about because I think it is a critical missing piece of the Cortez district. And I think these guys have done an exceptional job defining the target. And we're going to see. We're going to see now. If they hit, are they going to hit on the first hole? There's never a guarantee like that, guys. I mean, that's just crazy talk. Okay. Are they going to test multiple holes? Absolutely. Okay. It's a broad scale target. They've got even new areas that they're recently identifying that, might add more information to this target. And that, I would say that the company has enough cash in the bank and enough horsepower here to test a number of holes across the broad scale Campfire target area, perhaps other areas around the property, in hopes of finding that big missing, we'll call it gold strike like target in the Cortez region here. And this is exciting. Is it a long shot? Sure, everything's a long shot at this stage, but are they swinging for the fence? I think so. I think this is one of these big stories that could be quite exciting. Let's go to the next slide. Now, this is the last in my alphabetical series, Yukon Metals. I've talked about them off and on over about a 9 or 10 month period. Last year, they did a lot of work in the field to enhance their targets, and one of them was this AZ property. Okay, this AZ property is a copper gold target. It's probably a skarn system, probably associated with a porphyry or something. And they're drilling now. Okay, they decided this was their highest priority target. They decided to go ahead and drill, and lo and behold, the first hole they're announcing they see malachite nazarite, down to 22 meters in the first hole. Certainly explains the anomaly they're seeing there. What the grades are, don't know, but we'll know shortly. But I think the company's quite excited by what they're seeing. It's the first hole of many they've got planned for this year. I don't want to build up the anticipation too much, and then people get, well, what happened to that? Well, this project has lots of targets scattered over a very broad area, and they're going to test all of them. So this is going to be an exciting year for this company. It might be like early stage Snowline, but for copper gold. All right, let's go to the next slide. Now I've got three brand new stories, and I'm just going to touch on them here. I don't have enough time to go over them in detail, but we have invested in Aztec Minerals Corporation here recently because of the work they're doing at Tombstone in Arizona. Tombstone is a well-known mining district. It's a copper gold district primarily, but there is an epithermal part to the system. And this program that Aztec is commencing here is going to be on that epithermal part of the system. Now, there is CRD mineralization as well, carbonate replacement style mineralization here as well. I'm very interested in that. I'm very interested in the epithermal part, which is more like we'll call it a vein-like or a structurally controlled thing. But I'm also interested in the CRD, which are more mantle or blanket-like things. And the company did hit last year a phenomenal interval. You can see there 569 gram per ton silver equivalent. It was over 25.8 meters, okay? And that included silver and gold. There was a gold kicker in that, so about a 3.5 gram gold within that. I think the follow-up work they're going to do here should show that there's some meat to this thing, to this epithermal system. Great. And I think, it alone could be a significant discovery, but the CRD down at depth, this is down into the limestones below the epithermal part of the system. I think those are where the bigger prize could be. There are CRDs in this area that produced a lot of metal, a lot of silver, gold, as well as base metals. And I think these guys have done a great job targeting. I'll talk more about Aztec probably in the not too distant future as they get closer to testing those CRD targets. Let's go to the next slide. Orestone. Here's another news story. Okay, Orestone, this Francisca gold project, which is in Salta province in Argentina. And yes, we are starting to look at Argentina as a viable jurisdiction now, which is a refreshing, event here recently from political winds that have changed in that country. But this project, I remember somebody telling me about this years ago, like years and years ago. And then, Argentina has been a tough place to invest. But I remember thinking, boy, this thing is basically a ridgeline gold occurrence. It's all oxide, okay, and it's following a ridge. So topographically, it's on top of this ridge. And, exactly what type of system it is, we don't know yet. Okay, is it epithermal? Is it maybe porphyry? Don't know. But the numbers out of here are very encouraging. You can see some of the channels there, those two black channels. There's 100 and I can't read it quite, but 100 and something teen of 0.83 gram gold. And then there's another one, 50 odd meters of 3.6 grams, I believe it is gold. Again, it's on a ridge. It's oxidized. The strike of this system is quite extensive. This is just the southern part of this. It actually continues northward for, I think, 2 or 3 kilometers. It looks like a big gold system. Should be relatively easy to drill. Yes, there was historic drilling, but you can see it was off to the side of the actual anomaly. Why they drilled down there, I don't know. That's a historic drilling that I was referring to. What intrigues me is the gold, which is sitting on top of the ridge. And again, as this company gets down there and they do some field work, probably in the next couple of months, I will talk about the story more as we learn more about it. All right, let's go to the next slide. And I think this is the last one. Yes, trifecta is new. I might have touched on this in one of the videos in the not too distant past, but look, we have taken a position in trifecta. It is one of the reduced intrusive stories in the Yukon. Their main project is Mount Hinton. It's a reduced intrusion. It's not far from Mayo. It looks interesting. I'm actually mostly interested in the Rye project, which is further east in the Yukon. It's more closer to Valley, we'll say. But the company is starting work at Mount Hinton. And what they have here are a number of high-grade veins. Yes, there's some beautiful high-grade veins that come out of the granite stock, or the likely igneous driver for Mountain Hinton here. But they also have a target developed around potential intrusive hosted, like sheeted vein hosted mineralization. It's a bit more speculative, the intrusive hosted target at Mountain Hinton, but they're going to test it, and we'll see. Maybe they hit bigly here. But my main focus for Trifecta is the Rye target, which I'm really hopeful that the company gets permitted to drill later this year. They do have good data out there that says sheeted veins, yes, and outcrop, very extensive area with sheeted quartz veins, angold, bismuth, tellurium, all the bells and whistles that we would like to see in a reduced intrusion. All right, so I think Trifecta, very early stage, but has some high quality, reduced intrusive type targets that might play out and pan out to be big discoveries. Who knows? All right. I think that's it for this week. Appreciate everybody listening. I'll hand it back over to Tavi and Kevin. Take care.
Thanks, Quinton. So, look, we've got three funds that we manage here at Crescat: the Global Macro, the Long Short, and the Precious Metals Fund. Excuse me. And pardon me. I highly encourage you to reach out to Merrick if you're interested in learning more about our strategies. I think we have some very timely and exciting macro themes that we're positioned for. And that's what we're all about. It's not just about hedging against risks. It's about taking advantage of risks and opportunities to capitalize on big macro imbalances. We think there's some big macro imbalances out there that are ripe for exploitation, and we're positioned for them across the firm. And so we do encourage you to check out our website, reach out to Merrick if you'd like to learn more. Tavi, do you have any final comment?
No final comments. It was a healthy pullback in some metals. I was just looking at some charts. Healthy pullback in metals after a big move in the last few weeks. I think that's all good for folks that are in the long-term investment of these big trends, and probably a lot more to come in our view, at least. So, all right, well, let's finalize the call then. We'll be back in 2 weeks for another presentation. So we thank everybody for watching this, and if you have not followed our account on YouTube, I suggest you to do so, and also our Twitter or X account as well, Crescat _capital. And that way you can be notified of our upcoming videos and content as well. Anyways, thanks everybody for watching. Again, contact Merrick if you're interested in the funds as well. Take care. Have a good one.